Good morning. It's a great place to start. I'm also thinking about Palantir CEO Alex Karp. He was on Squawk this morning, too, and he was telling the team that he didn't think they were worth as much at their peak, but he also doesn't think they're worth as little at their trough. So where do they come in? When do they start being more amenable to M&A activity, more consolidation?
Well, hi, Deirdre. Great to see you again, and thanks again for having me. So a couple of key things there. First of all, as we look at the M&A market, the M&A market in 2022 was down a little over 35%. But that's down from an all-time record in 21, where we did almost $6 trillion of M&A. So still a very good market, fourth or fifth best market ever. Our M&A team thinks in 2023 going forward, you're going to have another robust market. And it sort of hits on Mr. Schwartzman's comments there a little bit when you think about valuation and digesting some of the valuation multiples. So if we look at that a little more closely, what you see is that when you were in COVID, you had multiples of fintech, internet, software going to the high teens or so. Pre-COVID revenue multiples were more around 7, 8 times revenues, and now you've had those multiples pull back to something below that. So to Mr. Schwartzman's point, it takes a good year or so to digest and get used to the new multiples, and now you've had that time. So now we think you're going to see boards come together and start thinking about the new valuation parameters and what's best ultimately for the target companies as well as the acquirers.
Right. So you hear a lot about valuations going back to pre-pandemic levels, but I wonder, Bob, is that even the right level? I mean, we've had, a decade of very easy money when technology has been able to reach higher and higher peaks. So do you need to go back further, which is what some bears could argue?
Yeah, I mean, we looked back at the multiples all going back to like 2010. And what you saw was still very strong multiples there. That 4 or 5 times revenue, which is where we are now, is still very much justifiable. It's going to obviously have to relate to the underlying performance of the company, right? So how fast is revenue growing? What is the margin structure? How does the balance sheet look? And look, with the lead-in, as we talked about there, you've got over $3.5 trillion of strategic capital of dry powder on the sidelines looking at targets. You also have over $2 trillion in private equity. And both of those constituents want to put their money to use and help grow inorganically or ultimately capture some of that value. So I think in our conversations with boards and C-suites, you're much more seeing a coming and meeting of the minds than you ever did, say, 9 months ago.